Thank you for the opportunity to present to you this morning. When Chris mentioned that I'd be presenting at Glazier's Hall, I had a vision of a room full of amazing fenestration. Maybe it's behind the curtains, but they've made up for it with the chandeliers. So we'll talk about the instant economy. And at Modular, we believe it's the most forward-thinking digital companies that differentiate themselves in the instant economy by being able to access in real-time business services that enable them to create that differentiation, that great customer outcome, that great customer experience. So companies that can make real-time decisions, that can automate complex workflows, and can automate complex payment journeys. So I'm going to talk about a number of trends that we're seeing in the market that are driving payment efficiency within what we have called the instant economy. I've got 5 trends. I'll open up with some a bit of narrative around Modular, and then I'll move into some of the drivers for change in terms of the instant economy and the different use cases we're seeing. And then I'm going to dig into 5 different trends and talk to you about some individual use cases within those trends that we're seeing. So Modular is the banking and payments as a service API for business. We're first and foremost a technology company, but a technology company with a deep understanding of payments. And we're disrupting in the transaction and commercial wholesale banking market space. But we're not a bank. We're regulated as an EMI. We're an electronic money institution. But also in the context of open banking, we're a payment initiation service provider and an account information service provider too. We're operating at scale. We're processing well in excess now of £1 billion across the platform each month. And in fact, we're probably nearer to 2 million transactions per month rather than the 1.4 that's quoted on the slide here. And customers, business customers can access through our API a whole ecosystem of different payment options. Indeed, we announced only last week that we're now a directly connected settling participant of the Faster Payment Scheme, and we have settlement accounts at the Bank of England. I think we're one of only a handful of non-banks that have that level of integration into the national payments infrastructure. We're also directly connected to the BACS scheme as well. And our customers sit across a whole range of different sectors and verticals, and I'll talk to you about some of those, but we provide automation around payout, automation around reconciliation, and pay-in services. And then we provide the technology layer that allows a number of our business customers, our fintech partners, to build their platforms on top of the technology that we provide. And let me give you just a couple of examples of the customers that we work with. So, as I say, across a number of different sectors, I've just chosen to use our alternative banking clients, a couple of those, and a couple of our alternative lending clients on the slide here. So in the case of Revolut, for example, we're providing the underlying accounts and access to the UK payment schemes. We're doing the same with dozens. In the case of Liberis and Lending Stream, we're providing an automated disbursement solution and a way for those guys to automate the reconciliation of inbound payments into their platform. And then we also work with a number of partners. So we work with Paxport in travel. These guys service OTA, so we have a specific use case and a specific solution for the online travel agency market. GPS are a card processor, so we work with those guys again to provide the underlying accounts infrastructure for various card programs. We work with Accenture, who are a payroll provider. I'm going to give some examples of some trends we're seeing in payroll. And we work with Sage, who have integrated a subset of the Modular proposition into the Sage Line 50, Sage Line 200 cloud products. And again, I'll talk to you a little bit more about what we're doing in the accountancy space in terms of helping improve the workflows and automating those payment journeys and some of the reconciliation steps involved within accounting. So the digital businesses that exist and thrive in the instant economy demand innovation. And in fact, for too long, innovation has been absent from the banking and payment space simply because the supply of payments has really been restricted to the tier 1 transaction banks. But of course, there's been significant regulatory change in the last 4 or 5 years. So technology companies like Modular can now exist in that market. We're providing those regulated services. We're able to meet the new customer demand and the new business models that are obviously relevant to that instant economy. And here we've just got a few data points as proof points really of why the change is happening. So I'll just call out a couple of those. So, and these are stats from Forbes and Accenture. 71% of businesses want online onboarding from their banking providers. 78% would consider working with a technology firm like Amazon and Google. And then 47% of SMEs would actually consider working with a non-bank brand to provide their banking and payment services. And these businesses are expecting and demanding a higher standard from their payments. They're driving a new customer experience. They're wanting to open accounts instantly. They're wanting access to a whole ecosystem of different payment options. They're looking for automation. They're looking to reduce manual errors in the processes and actually reduce costs as a consequence. And this is all achievable through seamless API integration, delivering the automated reconciliation in some of the use cases that I'll go on to talk about, and real-time payments on a 24/7 basis. So let's take a look at five trends. This is just a subset of what we're seeing in the marketplace. And what I've tried to do with the slides is, on the left-hand block, show what's happened in the kind of traditional process in the old world, and now in the instant economy with automation, with integration through API, the benefits that we're able to realize in these different use cases. So in the case of accounting, certainly the challenge with accounting has been the volume of kind of manual processing and the reconciliation steps that are entirely manual in the process of making invoice payments and payroll payments. So, and it might be best served if I go on to the next slide and we can look at a workflow. So along the top of the slide, we've got the traditional process, and along the bottom, the new instant economy, where modular is providing the automation. On the left, your left, on the top half, creating suppliers would require the supplier to be created in the accounting software, and then again in a standalone banking portal. In the new world, in the instant economy, where modular can provide that automation, you create the supplier just the once in the accounting software, and that's automatically then created in the modular payments platform. And then as far as processing payments is concerned, the process in the old world would be to identify the invoices for payment in the accounting software, to then extract a payment file, to then manage that payment file through a banking portal, and then for those payments to be executed through that banking portal. Then the data has to be manually written back to the accounting platform, and that needs statements, whether those are online statements or paper-based statements, to then take the data and manually write that back line by line within the accounting platform. So it's a huge, cumbersome manual process. And what we're able to do in the instant economy is automate that journey end to end. So the user will still select the invoices in the accounting software for approval, but once they click pay, those payments are automatically sent through, executed through the payment platform, and then the data is written back. So once those payments are executed, the payments are then written back to the accounting platform, and it's fully automated, thus removing significant manual processing steps in that journey. And accounting is an important area for modular. We've recently been awarded £10 million from the RBS remedies package, and we've committed to match fund that with a further £10 million. So this is helping us accelerate our plans to provide alternative banking and payment solutions for the accountancy community and their underlying SME customers. And we'll move on to payroll. So probably 2 or 3 different trends that we're seeing around payroll and the transition to instant payroll. And one of the key drivers is the change in working practice. And obviously we're all familiar with the gig economy. And if I can give a for instance, in terms of instant payroll. So I should say we don't service this particular use case today, but certainly it's an area that's of huge interest to us. And we are definitely seeing more interest from prospects in that gig economy. But take an Uber driver who checks into the Uber platform at the beginning of their shift, and they work several hours, and they check out of the platform at the end of their shift. In the background now, Uber is able to calculate the commissions that are due to that driver. And within a matter of minutes, they're able to submit through an API the payment request to then send the commissions due to that driver via faster payments to their external bank account. Within a matter of minutes of the driver checking out and quitting their shift, they can be paid. That's going to be a differentiator for certainly in that kind of space where you've got a huge amount of competition between the various platforms, the Ubers and Lyfts and so forth. That's going to be a huge differentiator in terms of driver welfare and how they pay their drivers. Another point on that topic of welfare is the emergence of salary advance companies that we're seeing. So maybe more aligned to the typical monthly payroll cycle or the bi-weekly payroll cycle. Employers are becoming more aware of the risks of their employees having to use high-cost short-term credit, and consequently are partnering with these salary advance companies that provide a technology solution that allows the employees to draw down on effectively their earned salary to date. A simple app, the employee can check in and see how much they've earned to date. Obviously, they won't be paid until the end of the typical salary cycle, which might be, as I say, a bi-weekly or a monthly cycle. But via these apps, via these salary advance companies, for a low cost, they're able to access part of their earned salary to date. By simply clicking a button, that sends an instruction to the back office platform. The back office platform sends an API request to a payments platform, and that employee can take advantage of that salary advance within an instant. And then maybe the third trend is how we're automating the end-to-end process of salary, of payroll. The payroll processes typically have been driven by the back cycle. And the back cycle is a 3-day, at least a 3-day clearing cycle. And consequently, the initial steps around payroll calculation, the production of payroll files, the submission of manual files into the BACS portal or into a banking platform are extremely cumbersome, a number of manual steps. The very fact that you're producing files that need to be extracted from one platform, uploaded into another, creates a great deal of risk in terms of the data integrity and the potential to manipulate that data. So we're providing services to Payroll Bureau where they're able to automate that end-to-end journey in much the same way as I described in the accounting and Sage use case. And then a third trend, automating the automation of the account opening. And then a second theme is payment notification within those accounts that are opened. So one of the data points that I showed earlier was I think 78% of businesses want automation, want an online onboarding experience. The old world, the traditional process is even where a business has a relationship with a bank, it's a requirement for a form to be completed, for a wet signature to be submitted on a form to the bank, and the process of opening that account can take several weeks. Via an API, you can open an account instantly. Via an API, you can open multiple accounts. You can open tens of accounts, hundreds of accounts. That can all be done in real time. And in fact, that's a particular use case that we service for Revolut. As I mentioned, we provide their underlying account infrastructure. So Revolut will take their customer through the app, through the KYC, the KYB process. Once the customer's passed those steps, that may only take a minute or two, they will then send an API request to our platform to create that customer, to create an account for that customer. We return their account and sort code within milliseconds. So that whole end-to-end journey of onboarding with an alternative digital banking platform can be reduced to just a matter of minutes. And then these accounts that are being opened are digitized. These accounts have webhook notifications. So as payments land into these accounts, there are notifications to the back office platforms that enable the likes of Revolut and dozens to create the amazing customer experience through the app. Because the moment payments land into those accounts, those webhook notifications hit the back office platform. That then results in a push notification sent to the app. And as I say, creating a great customer experience. And just another example of the onboarding, that online onboarding, that automated account creation. So our customer Liberis is a merchant, is a cash advance business that provides advances to merchants secured against the receipts from their credit card terminals. So this might be a coffee shop or a hairdresser. Liberis will advance monies to those organisations, and they will insert themselves into that merchant, that acquirer settlement process. And in order to do that, they need to open an account in the merchant's name, but actually an account that they have some control over, and an account that's opened within their platform via an API using in this case, obviously the modular platform. The merchant acquiring funds are then settled through that account, and then there are split rules that are set up that actually on a daily basis deducts the share of the advance that is due to Liberis, and then the net amount is then sent automatically in real time to the merchant's external bank account. So for a company like Liberis to be able to scale their business, they need this level of automation. When they first founded their business, it was entirely manual, and they readily admitted that they couldn't scale their business without this level of automation. And indeed, to that end, they've probably saved in the order of 35% on their operating costs to be able to do that. And then a further trend around the instant reconciliation of inbound payments. So here a good example would be a lending business. Lenders will typically collect instalments using continuous payment authority or direct debit, but consumers and businesses alike are motivated to make early payments, overpayments, in order to reduce the interest that they pay on their loans. The problem is, historically, is that those advances, those early payments will be made into a standard corporate bank account. Those bank accounts firstly have no notifications, as I just described. The new breed of accounts can have these webhook notifications, can be digitised to inform the back office platform. So it requires the reconciliation team to make regular check-ins into the banking portal and check the balance in the account. And then even more challenging, even more troublesome, is the fact that customers will invariably make payments without providing reference data. And at that problem, it becomes very difficult indeed to repatriate those funds with those individual borrowers. So what lenders are now starting to do using the modular platform is to be able to create an account for each of those borrowers. When a borrower wants to make a payment into the platform, they will be issued their own individual account and sort code, and they will pay into that account number. And despite the fact that they may not have provided the reference again for that transaction, it doesn't matter, because it's a one-to-one relationship between the borrower and the account. The money's land in the account, there's a notification to the back office platform, the ledgers, the balances can all be updated instantly. So again, a huge saving in terms of cost and reduction in manual overhead and manual processing. And then finally, I'm afraid we're going back to open banking again and payment initiation. So maybe not a trend we've seen thus far, but a trend that we're projecting will happen. So notwithstanding anything that has been said by the contributors on open banking, I think that there are a couple of reasons why, and this is very much a view from the UK only, so I think that the UK is probably more advanced in terms of the maturity around APIs. So we believe that the payment initiation service will become a viable proposition for us to take to market in just a matter of months. We haven't taken the product to market to date, but we are seeing an awful lot of interest from prospects. And as I say, I think the maturity around those APIs has got to a level now where actually this is the opportunity, this is the time to start to deploy the payment initiation service. So I think on two levels, and I'm sure there are plenty more examples why payment initiation is a good idea, but certainly in terms of improving that digital customer journey, where push payments are involved, so aside from card payments, where push payments are involved, it requires the customer to leave the website and to then go to another browser, open another browser, log into their banking portal, and to make a payment to that merchant. In order to do that, they need to know the bank details. They would, of course, be required to provide reference data if possible. And the whole process of kind of checking out of the merchant website, going to their banking portal is cumbersome. There's going to be high abandonment. By virtue of the payment initiation service, and I'll show a slide in a moment with just a brief image as to how that journey works, we think that the likelihood of abandonment is going to be reduced significantly. And of course, we're creating a much better seamless in-product experience. But of course, where cards are involved, dependent upon the average transaction value, then the potential with payment initiation is to reduce those costs. And of course, the settlement process around cards could be 2 to 3 days. I think one point that hasn't maybe been mentioned is the settlement process with payment initiation is instant. Albeit, I think Jan referred to some of the batch process that might delay the settlement process. And Modular has an answer to that in terms of how those funds will be cleared through a Modular account as opposed to through a third-party account. So here's the workflow, very simple. I'm sure many of you are familiar with the workflow here. On the left-hand side, the customer is on a merchant website or via an app, perhaps. Our merchant is XYZ, and they have chosen to pay by bank transfer. All they need to do is to select the bank that they're paying from. The bank details of the merchant are already populated. The reference data is already populated, so the consumer doesn't need to enter any of that information. The point that they press confirm, they're automatically switched, and this great experience of app to app is now available, one of the more recent features that's been deployed as part of the payment initiation service. And it may well be that if you've got an advanced telephone, all you need to do is actually kind of go through that facial ID process, and then the confirmation step is executed. And again, you'll switch back in that app-to-app journey back to the merchant, where it confirms that the transaction has been successful and the funds have been received. So, as I say, I think for certain use cases within the payment initiation, within an online journey, then this open banking opportunity is one that's going to be a huge success. And I'm sure, as I say, that we're going to see a great deal of activity in 2020. So I'm just going to conclude now, and I think that there are a number of reasons why the instant economy is thriving, a number of reasons why we're delivering payment efficiency to the instant economy. And that's not least because banking and payment services can now be integrated into core back office systems. I've given a number of use cases, a number of reasons why integration and automation is important. And of course, there's been two fundamental changes over the recent years. One is the technology, the ability to deliver these services through a single API, and of course the regulatory change that I alluded to earlier, where technology businesses like Modular can now provide alternative banking and payment propositions, alternative to the traditional wholesale transaction banks. And as a consequence, businesses can now automate payment processing, drive those efficiencies, and businesses can scale and develop new customer propositions, new business opportunities.